This is Progress FS speaking. Welcome to my YouTube channel. This is the continuation of the video which I made and posted earlier on how to use a MACD divergence indicator. So some persons asked me what these lines are all about. So this line, as you can see, is not necessarily important, but it's important, especially if you're using it, but it's also lagging, which I don't trust. So it indicates this divergence. Normally, if you are using ordinary MACD, or the MACD that is well familiar with the MT4 MACD, so whenever you hear these divergence lines, these lines you see, I don't know if it appears or if it's going to appear, or if it appeared in your own, or maybe your own trading platform, because it depends on brokers. Some brokers don't add it, some brokers do. So these lines indicates the divergence that is occurring in the market, that is the higher high and the lower highs, in the market. So one thing is that it behaves somehow. Sometimes whenever it appears, it's not when it reacts. So that's why I didn't talk much about it. So, but the implication is that whenever it appears, the responsibility of the red signal line to cross below the, blue signal line to cross below the red signal line. So that is what the lines, the green lines, dot lines, and the red dot lines does. So it's part of the MACD divergence indicator. So, but one thing, like I said, is best when you are trading using this particular information which I gave you about the histogram and the signal lines. Whenever it is above the MACD zero line level and the shooting up and down of the histograms. You have to watch the first video in order to understand this properly. So in this video, let's go straight and add the moving averages. So you can use the insert here. You can use the insert button. See the indicator list here, and add the moving averages. Or you can choose to use displays, but this is specifically for those trading with IC market, because it's IC market that myself I'm using even as I'm making this video. So if you are trading with this ordinary currency pair, for instance, I used to use higher time frame because it's more sweet to use it while trading with this MACD divergence. I will show you later. So let's add the indicators. So moving average, the first moving average we are going to add is the 10 moving average. You set the period to 10, then method to exponential, then you set the maybe the color to any color of your choice, then apply close. So here you can, this is where you can choose to add the size of the, the volume which you want to see the line in, and this place as well. That's if you want to determine whether you want to dot it. So then you OK. So here, let's go back to the same place. We select moving average. Then here, we apply 34 moving average. So here is simple. Then you leave it to apply close, or you set it if your own is not there. And here we like to make it more bigger. Then I use color blue here. Then OK. So from here you can determine what is going on in the market. Let me show you something very significant. I have to reduce this chart in order for you to see what I want to show you. So let's reduce it. So do you see from here now, let me show you before I then enlarge the chart and of course analyze how to use it. Here, so you can see something here in this place. Also, maybe let's add you can choose to add fractals, but it's not necessarily important. So let's forge ahead. You can see here the moving average, the 10 moving average crossed with the 34 moving average. That is the 10 EMA crossed with the SMA, 34 SMA in this place. But before then is what you should understand here. Before then, the MACD signal line, look at it here, this place. The blue MACD signal line crossed below the 10 signal line. The MACD blue signal line crossed below the red signal line. So, but if I were you, that is if you want to trade reversal, once it crosses, like I told you, if you are in uptrend, as you can see here, something was going up and it crossed. Immediately it crossed, what you have to do is take your profits at this point, because what used to indicate reversal is this MACD blue signal line and the red signal line. That is what used to indicate reversal first, before the moving averages will confirm it. So what we do here is immediately the blue signal line crossed below the red signal line, while they are still above the MACD zero level line here. So you opt out of the market by taking your profit and wait for reaction of these moving averages. So you can see here the moving average, immediately it crossed below the 10 of EMA, crossed below the 34 EMA. You see something that's happened here. The blue and red signal line also crossed below. They also crossed below the MACD zero level line. So what are you looking for in this place? Immediately they cross below the signal line, like I used to tell you in some of my videos, you wait for retracement, which occurred here. I will widen the chart to show you. So the retracement which occurred here, you see the retracement which occurred at this point before you strike a sell. So long as this signal line remain below the MACD zero level line, the market will continue trading down. So now let's see another scenario. Here you find out that the MACD signal lines approach the zero line here, crossed above and could not go much further, then it pulled back, crossed below, which I always advise that people should avoid wherever the market is ranging, especially if there is serious movement in the market. You allow it to range first. So you can find here when this signal line, the blue signal line, crossed above the red signal line, the moving averages were still very much open. But as at the time the same blue signal line and red signal line crossed the MACD zero level, the moving average, the 10 EMA, also crossed above the 34 SMA, as you can see here. So what and how would you know when to make your entry? I used to say wait for retracement, which you see what happened here. So everything that happened, the market could not go below the 34 moving average. So, but like I said in one of the videos, watch all my old videos in order to see this particular point which I am about to make here. the retracement approach until the chart or market price connected with this 34 moving average, SMA. Then you can as well find at the same time when it retraced and continue ranging until it got to this. I can maybe widen the chart for a better understanding. So you can see what I'm saying here. So it was ranging, and at the same time it was ranging. When it pulled up, you can see the signal line, the blue signal line was below the MACD, below the red signal line, and of course above the MACD zero line. So but immediately you see this rejection, maybe after the market news, and you find this bullish engulfing candlestick, which is what I'm also waiting at this point to determine where the market is trending to. So this bullish engulfing candlestick, then you strike your entry automatically in as much as this blue and red signal line remain above the MACD zero line level. So if you want to confirm the entry before you strike, then you wait for it to cross proper. Here you can see the blue line crossed above proper the signal line. Then you make your entry anywhere around this place with proper risk management and allow the market to move. And while the market is moving, immediately you see this kind of place. Like I told you in the previous video, you have to watch the pattern of this video in order to understand. Once the signal line cross below the blue signal line cross below the red signal line, you opt out of the market because it indicates major retracement, and wait for when the candlestick will get to the 34 moving average. That is where your interest comes in. Then you can see here, once it gets to this 34 moving average, you see a lot of bullish engulfing candlesticks start developing, or maybe reversal candlestick start developing. Look at this, look at this, look at this one, look at this one. 5 of all of them at the same time. So you strike your entry here, here, or in this place.